Our economy is in a very weird state, and you have some experts who think that our economy is going to go into a depression and our economy has a very not so good future. And then you have other experts that say, no, our economy has a very bright future and it's going to continue to boom for the years to come. So in this video, I want to analyze some of the opinions of different experts. That way you can get a better idea of what might be coming and then have a better expectation for yourself. What's up, everybody? I am Jaspreet Singh from theminoritymindset.com, where money minds rethink rich. Robert Kiyosaki, Peter Schiff, Michael Saylor, Cathie Wood, and Michael Burry are all very successful people. They all work in the financial market, and all of them have very different opinions about what's coming next in our economy. Robert Kiyosaki is the author of Rich Dad, Poor Dad. He is the founder of the Rich Dad Company, and so he's one of the most well-known financial educators in the space. Robert Kiyosaki has come out and said very openly that he thinks that we're going into a depression. He says that we're actually already entering a depression, and he says that because of this, we're going to see some sort of economic collapse. Peter Schiff says something a little bit different. Peter Schiff is a very successful, very prominent, very well-known economist, and he runs some mutual funds, and he's very big in that space. He owns some gold mines. So again, a very successful economist who has been very vocal about what's going on with the Federal Reserve Bank and is very concerned about what's happening to the dollar. He says that the bigger concern is a dollar crash. He's worried about a dollar crisis. Michael Saylor is the CEO of MicroStrategies. MicroStrategies is a publicly traded company, and he was one of the first people to move a big chunk of money into Bitcoin. So he and his company moved $3 billion of their own cash into Bitcoin, bought more than 114,000 Bitcoins, and he has some concerns about the economy, but he's not worried about a dollar crash. What he's saying is that the dollar is going to be around for a long time, and he says that it's going to coincide with cryptocurrency, and so he's not really worried about an economic slowdown or a dollar crash, but he does think that people are going to move away from the dollar and move towards cryptocurrency, but it's going to be working with the dollar. So a very different opinion. Then you have Cathie Wood. She is somebody who's very popular with young investors. She's the person who started the ARK funds. ARK is the fund that trades and invests in a lot of the more startup, the more younger, the more growth companies. So people really like her. She has seen a lot of success in the last number of years. So people like her because of that and because they made a lot of money with the ARK funds. And then you have Michael Burry. Michael Burry is the person who is known for really predicting the 2008 crash. Interestingly, Peter Schiff was also very well known for predicting the 2008 crash. Peter Schiff went out to the Mortgage Bankers Convention before the 2008 crash in 2005 and 2006, around that time. And he was talking about how this was a real estate bubble that was going to implode, even though nobody was believing him. But he very openly spoke about how the real estate bubble was going to implode. Michael Burry, same thing. He was talking about how the 2008 real estate bubble was going to crash, and he actually shorted the entire housing market and made a lot of money because of that. And now he says that we are facing the mother of all bubbles. Michael Burry has a not so good outlook on the economy. Michael Burry says that he thinks that we are going to enter a big crash, versus Cathie Wood says that we have no crash coming, there's no bubble to worry about, and that our market is going to continue going up. So we have some very differing opinions, and I want to kind of put all these against each other and analyze them. That way you can understand what's going on in the world. That way you can make better decisions with your money. So let's jump right into it. But before we do that, I need you to do me a quick favor and smash the thumbs up button below. And if you haven't already, be sure to join our free Discord server called the Guac Talk community. We call it Guac Talk because, as we all know, extra guac is truly a symbol of extra wealth. And in this community, you can chat about all things minority mindset. You can chat about the real estate market, the stock market, the cryptocurrency market, and all things building wealth. This community is completely free. It's a way for you to network with and talk with other investors. So if you want to learn more and join our free Discord server, I'll put the link to where you can join in the description below. Now, as a little caveat to everything that I'm going to be discussing, I have talked personally to Robert Kiyosaki, Peter Schiff, and Michael Saylor, but I have not personally talked to Cathie Wood and Michael Burry. So the opinions that I'm going to get from these two people are from articles that I've read online. These three people are from my actual conversations with these three people. By the way, if you want to see any of the conversations that I had with these three people, just check out the interviews that I've done on the Minority Mindset channel. So I organized these 5 people on 2 different categories: the boom side and the bust side. On the boom side, who think the economy is going to continue to boom, we have Cathie Wood and we have Michael Saylor. The bust side, we have Robert Kiyosaki, Peter Schiff, and Michael Burry. let's start by talking about over here on the boom side. So Cathie Wood has called out people like Michael Burry, saying that they have no idea what they're talking about because she says that people like Michael Burry don't understand innovation. She's a huge investor in startup companies and she's a huge investor in new innovation, new technologies, because she believes that we are going to be facing deflation in the future, not inflation. And the reason why we'll be facing deflation, according to Cathie Wood, is because we're going to see so much more innovation, so much more technology, and this technology is going to drive the price of products down. And because of that, she's a big believer that our economy and the market is going to continue to boom. She says that there is no bubble in the market and we couldn't be further from a bubble because we have so much more innovation. And she says that these people don't understand innovation and they don't understand technology. Now, she puts her money where her mouth is because all of her ARK funds, ARK, ARKK, ARKF, and all those other ones, she's investing her money in a lot of different places. And the thing that all of them have in common is that they're all investing in some sort of innovation. Now, as a little bit of a disclaimer, I do have some of my money invested in some of these ARK funds. According to Cathie Wood, we are in a period of explosive innovation and most indices and most traditional investors don't understand that and they're not looking at that. And that's where Cathie Wood says that she sees a lot of opportunity and that's where she's investing her money and the fund's money. And in 2020 and 2021, she saw some pretty great returns. Michael Saylor, again, is the CEO of MicroStrategy. He runs a company that's traded on Wall Street. He runs a software company. But the thing that makes him unique is he's also very big on Bitcoin. So he took a big chunk of their company's cash and moved it into Bitcoin. And then he went out and he raised billions of dollars in debt and he used this money to buy Bitcoin as well. And according to him, he believes that Bitcoin is like the future of property, the future of digital property. And he says that no other cryptocurrency has come close to what Bitcoin has. And so he looks at Bitcoin almost like this scarce resource, this scarce piece of property where there's only 21 million Bitcoins in the world. And in the future, everyone's going to want to own Bitcoin. And so he's trying to acquire as much of this as possible now because as more and more people want to buy Bitcoin, you're going to have more demand, but there's a limited supply, which ultimately means that Bitcoin will have to go up in price. And so according to Michael Saylor, he thinks that Bitcoin can only go up in price for the long term and it will go up forever. Unlike the value of our dollar, which goes down forever, because as we print more money, the value of our dollar goes down. So because of that, he has moved billions of dollars of his company's money into Bitcoin, and he's a big believer in Bitcoin. Now, interestingly, you have a lot of people that move their money into cryptocurrency because they're worried about a dollar crash, they're worrying about a dollar crisis, they're worried about what's going to happen to the economy. But Michael Saylor's a little bit different. From my conversation with Michael Saylor, what he says is he thinks that the dollar is going to continue. He says that the dollar is going to continue being the world's reserve currency. He also says that smaller countries are going to lose their currency. They're going to start adopting the dollar. So you're going to see a more widespread adoption of the dollar across the world. And the dollar is going to be used in conjunction with Bitcoin. He doesn't think that people are going to actually make transactions with Bitcoin. He doesn't think that it's going to be a currency. Rather, he thinks it's going to be used just as a property, as an asset. And instead, people are going to make transactions with dollars. So people will borrow against their Bitcoin, and then they will use dollars to make transactions. And so he does not think that we have any sort of dollar crisis in the future. He is worried about inflation like everybody else. And he says that it'll be taken care of. The dollar will still continue to be the world's reserve currency. And because of that, he owns Bitcoin. And he didn't seem too worried about some sort of economic crash or an economic slowdown. He says the economy is in a period of growth. Let me just show you what Michael said here. So do you not anticipate people then transacting with Bitcoin? No, because I think the whole idea behind it being a cryptocurrency is people expect to use it as a currency, use it to go out and buy things.
Yeah, I don't think so. I think that's wrong. Like in the next decade, that won't happen. As long as there are nation states, as long as there's a viable government, they're going to protect the currency. Unless you expect the United States to collapse or the Chinese government to collapse, right? There's going to be the Chinese currency and the US currency.
But do you think if more people took their cash, moved it to Bitcoin, that would create some sort of deflation, which would in turn hurt the government? Don't you think the government and the Fed would try to do something to stop that because they want to keep inflating the value of the currency to keep paying off their national debt?
Not this decade, right? Bitcoin's only $1 trillion asset class. Gold is 10 trillion. So if Bitcoin went up by a factor of 10, it would still be inconsequential. If it went up by a factor of 100, it will start to compete with all the equity indexes and the bond indexes. So when Bitcoin is $100 trillion, it'll be 5% of all the money in the world or 10% of all the money in the world, you see. So Bitcoin is not really a threat to strong governments, to the US and to China, especially to the US, it's not really a threat. It's more of a benefit for the next decade. It's more of a threat to weak currencies. If you have a weak currency, that currency is being replaced with a dollar, and Bitcoin and the lightning rail is the rail over which the stablecoin dollar is going to travel.
Now, if we come over here to the bus side, we have first Robert Kiyosaki. Now, Robert Kiyosaki is one of the most well-known financial educators, and Robert Kiyosaki has a not so optimistic view about the future. So Robert Kiyosaki says that we are going into a depression. He's worried about the dollar, and he says that asset classes like stocks and real estate are all going to fall. He says that we're going to see the biggest crash, the biggest depression that we've seen yet. Now, this isn't the first time that Robert Kiyosaki has said anything like this before, but he's very worried now. He's very worried about what's going to happen to the entire economic system and the entire asset, all these different asset classes, because he's worried that all these things are going to go down because of what the Federal Reserve Bank is doing. He says that the Federal Reserve Bank is run by evil people. He doesn't like the way that this country is being run. And because of all these things coming together, he's very worried about the entire economic system. And so he says that we're going into an utter depression.
So they want to take all of our private property away, and it would then go to the state. And that's why when you study communism and Marxism, it's a centralized economy. It's central, it's called, in military terms, it's called command and control. I went to military school. So it's a command and control economy where the government tells you everything. And so that's why the Federal Reserve Bank is part of a communist thing. It's a central bank. And the central bank is not American. It's not a bank. And there's no reserves in it. And it's the Fed today, in 2021, is the third central bank. And for history, since Jefferson and those guys, they kept saying, we cannot have central banks.
What Robert Kiyosaki has been doing is he says that he invests his money into a few places.
Gold, silver, Bitcoin, and bullets.
Gold, silver, Bitcoin, and bullets. He says gold, silver, Bitcoin, and bullets. That's what he's been investing in. Gold and silver because these are precious metals, these are commodities, they are stores of value because it takes time, effort, and labor to mine these metals. He buys Bitcoin because, again, he believes that it's the people's movement of money, and so he owns both of those. And then bullets because he says that we're going to go into a revolution, and because of all that, he is investing his money into those places, and that's his way of protecting his wealth, and that's what he says is going to happen and what he's doing about it. Peter Schiff has a little bit of a different opinion. What he says is, yes, we have a lot of bad news ahead of us, but it's not going to be like a traditional market crash like we've seen happen in the past. In 2008, when the real estate crash happened, if you had cash, well, then you could go out and buy real estate properties for dirt cheap. After the 2001 dot-com crash, if you had access to cash, you could go out and buy stocks for very cheap. After the 2020 stock market crash, if you were sitting on cash, you could use your cash to go out and buy stocks for cheap. What he says is the next crash is going to be different. He is worried about the economy. He says that we could see another stock market or real estate crash like we've seen before, but he says also we might see a dollar crash. He's worried about a dollar crisis, where now the value of the dollar goes down. The government keeps saying that the inflation that we're seeing is the sign of a good economy, but it's not. I mean, you're saying it's the opposite.
Yeah, I mean, that's what politicians always want to do. They want to kind of blame the public for the inflation they create, and they want to pretend that, it's the price we pay for our prosperity. But it's nonsense, because strong economies create abundance, not scarcity. That's a booming economy. Prices go down, the cost of living goes down, so the standard of living goes up. It's a weak economy that doesn't produce enough goods, where central banks just print a bunch of money. That's when you see rising prices. So their rising prices are going up because the economy is weak, not because it's strong.
What's going to happen to the dollar then?
Yeah, well, we've been printing a lot of dollars, certainly going back to the original QE programs following the '08 financial crisis. I thought back then that we already would have had a dollar crisis. It hasn't. And that's kind of lulled everybody into this false sense of security. But that dollar crisis is coming. I mean, how much longer, whether it's a few more months or a few more years, I can't tell you. But at some point, the dollar is going to crash, beneath the weight of all this new supply, not just the dollars that have been created, thus far, but the dollars that are going to be created in the near future to finance exploding budget and trade deficits.
Now, this is a little bit different than other crashes because it works kind of like the opposite. If you saw a dollar crash, that means that the value of a dollar goes down. Now, if the value of a dollar goes down, then stocks and real estate don't go down. They would actually go up relative to the value of the dollar, because now you would need more dollars to go out and buy real estate. You would need more dollars to go out and buy stocks. So your asset prices would go up relative to the value of the dollar, creating kind of a reverse crash. He says if that happens, you could see a stock market crash or a real estate crash without seeing the asset prices of these stocks or real estate go down. You would just see it relative to the value of the dollar, because he says that the value of the dollar will go down, and relative to that, he believes that the value of gold will go up. Peter Schiff hates Bitcoin. Peter Schiff hates cryptocurrency. We got into a little debate with each other about Bitcoin and cryptocurrency, but he says that Bitcoin, cryptocurrency, all of that is going to zero. He says that Bitcoin is for sure going to go to zero. He says it's one big scam. He says it's a Ponzi scheme, and so he doesn't believe in any of that. Instead, he talks about owning physical gold. He owns gold mines, and so for him, he owns gold as a hedge, because if a dollar crash were to happen, the value of the dollar goes down, well, then he will own physical gold. And when you were worried about that type of inflation, dollars flow to gold. So then gold would become more valuable relative to the dollar. And then he says that you would be able to liquidate your gold, you would be able to sell your physical gold, and then use this gold to then go out and buy assets, stocks, real estate, whatever it might be, but you have gold as your protectionary hedge. So he doesn't believe in cryptocurrency. He is worried about a stock market and real estate crash, but what's unique is he's more worried about a dollar crisis because of all the inflation that we're seeing. So he's worried more about this very high inflation, which would cause the value of the dollar to go down, and due to that, that would make the price of gold go up, and then he could use gold to then buy these assets. And then we have Michael Burry. So Michael Burry is famously known because of the movie The Big Short. The Big Short takes place during the 2008 crash, and when the whole real estate bubble was building, he went against the grain. Everybody was investing in the housing market because banks and the government and everybody thought, Wall Street thought, that home prices and this real estate market could only go up. Now, he went against the grain and he started shorting the housing market when he sensed the bubble. So he was one of the very few people that was shorting against this entire housing market. And then when the housing market ultimately burst, he made a fortune, and that was when the entire financial system almost came crumbling down. So Michael Burry has seen a lot of success. He's known for going against the grain. He's known for doing things that people think are not normal, and now he's very worried about the economy. In fact, him and Cathie Wood have gone at it many times. He thinks Cathie Wood and her investments are going to go bust. He thinks that we're going to see one of the biggest crashes ever in the stock market. He says that we're going to see this massive crash in the cryptocurrency space. So he has a very bleak outlook. He's worried about inflation. He's called out the Federal Reserve Bank for lying about inflation, and he's worried about asset classes because he says that we're going to see a massive implosion in the stock market and the cryptocurrency market. This is where you have a lot of confusion. What do you do? I mean, if you think the economy is going to boom and you start putting your money into the market and then you're wrong, well, now you see the value of your portfolio get cut in half. That's a worry. Now, if you think the economy is going to go bust and you keep your money in your bank just waiting for this crash, and the crash doesn't happen, well, now the value of your cash just gets eaten away by inflation. Or if you're really worried about inflation and you move all of your money to gold, or you move all of your money to these inflationary hedges, and the market continues to boom, well, then you miss out on that upside. So what do? This is where personally, you got to figure out what's right for you. Like for me, I don't like to predict the future. I don't try to predict the future because I can be wrong, and I don't like being wrong. So instead, I just move my money in different ways. That way, no matter what happens, I can come out a winner because I don't know what's going to happen, and I don't like to try to predict that. So I invest my money in 5 places: real estate, stocks, businesses, cryptocurrency, and physical commodities like gold. Now, if we see a boom in the market, well, my stocks will benefit, my real estate will benefit. If we see a bust in the economy, well, then I can always liquidate some of my gold and buy more stocks. I can buy more real estate. I have some of my money in stable coins earning me interest. That way now, if we see a bust in the economy, I can sell some of these and go out and buy assets. If we see a dollar crisis, well, then I own physical commodities like gold. Now, I disagree with Peter Schiff. I do own some cryptocurrency. I own some Bitcoin. And so if we see a dollar crisis, well, then I have these commodities like physical gold, and I can sell that, and then I can use this to go out and buy other assets. Here's what we know. In 2021, we saw a very high amount of inflation. In 2022, we're going to continue seeing very high inflation. Now, the Fed and the government keep saying that this inflation is transitory, but we don't know how long this transitory is going to last. The Fed first said that the high inflation is only going to last until the middle part of 2021. Then they said it's only going to last until the end of 2021. Now they're saying it's going to last until the middle part of 2022, maybe even the end of 2022. So we don't know how long transitory inflation is, and we don't know if this inflation is going to go away and if prices of products are going to go back down to what they were before 2021. I mean, is that going to happen? In order for that to happen, you have to have companies that get their costs down, because if companies get their costs down, then they would be willing to lower the price of the products. But even then, the only reason why they'd be willing to lower the price of the products is if people are not buying the products. So if, let's assume that companies are now able to produce their products for a lower cost, well then in order for them to lower their prices, they'd have to see their sales go down. And if people are still buying their products and they have bigger margins, well then they're probably not going to lower their costs unless there's some other factor forcing them to lower their costs. So on the inflationary side, what we know right now is that we are still in a period of high inflation, which means that the money you have in your bank is losing value. Your dollars are losing value in the bank, they're losing the buying power, they're being diluted, and so savers are losers. I mean, if you're saving all of your money, then the value of your money is being eroded by inflation. But at the same time, people still have a lot of economic worries. Like our economy is growing, but it's not growing fast enough. And part of the reason why our economy is growing at the rate that it is right now is still because we have a lot of cheap debt in the market. The Federal Reserve Bank does not want to raise interest rates, and they don't want to raise interest rates very quickly. And so because interest rates are so low, businesses can borrow a lot of money very cheaply, and so they can access cheap cash, which will hopefully allow them to grow their company. And people will continue to go out and borrow money and spend. People will continue to borrow money and buy homes. As more people spend, like if more people go out and buy homes, well, that helps the economy grow. Because if people are buying homes, that means the construction industry will be growing. And that means the real estate agent industry will be growing. And that means the title agency will be growing. And that means the banking industry will be growing. So when you have lower interest rates, more people and more companies are more likely to go out and borrow money. As more of these people and businesses are borrowing money, well, then you have more dollars entering our economic system. As you have more dollars entering our economic system, the hope is that this will help grow the economy. Now, the concern is that our debt has been growing faster than the economy, but what the Fed and the government are trying to do is they're trying to grow it to the point so now our economy will grow faster than our debt, but that hasn't happened yet. And then on top of all of that, we have innovation, the Cathie Wood side of things. We have a whole new world of innovation. I mean, innovation is exploding. We have technology growing at the fastest rate ever. Now, this is great for consumers because now you can have better technology, you can have cooler products, and this technology can also drive the prices of products down. Because, for example, if I run a manufacturing plant and I have to pay for 1,000 employees to run the plant and to run the products, but now I can just use robots and only have to have 50 employees, well, then that would drive the cost of my production down. Now, it's not good for employment in that sense because now you would have less need for human work. But for the cost of products, it could drive the cost of products down because now I can produce my products for less. And if I can produce it for less, I can sell it for less. And then I can undercut my competition. And then my competition will either be forced to cut the price of their products or they could be forced to go out of business if they can't compete with me. This is where financial education is so important. That way you can cut through the noise, cut through the emotion, and then make smart decisions financially, because no matter what happens, you want to come out of the future a financial winner instead of being somebody who is just losing and paying the price of everything going on in the world and everything going on in the economy. So you want to be financially educated, learn from the different opinions, and then start doing something, because one of the things that all of these people have in common is they're all doing something. And the interesting thing is, no matter what happens, all of them are probably going to come out a financial winner, whether you see a boom or a bust, because all of these people have different positions that will benefit in different parts of the economy and in different circumstances. Unless there's something like Bitcoin goes all the way down to zero. If that ever happened, then that'd be very bad for Michael Saylor and his company. But besides that, all these people are positioned in ways to benefit no matter what happens. So again, this is why financial education is so important. That way you can take care of yourself, that way you can take care of your family, that way you can take care of your community no matter what happens. But you have to be willing to get financially educated, and then you have to take action. If you like what you saw so far, then you're gonna love this. The 5 areas that have been seeing some of the highest inflation are cars, especially when we're talking about used cars, gasoline, meat, car rentals, and airlines if you want to go and travel somewhere. Let's start with cars. Companies are not able to produce cars anymore, new cars, because there's a chip shortage. When the pandemic first hit, manufacturers around the world shut down, and these manufacturers stopped producing chips, these computer chips. Well, car companies can't get a hold of these computer chips right now because all the computer chips that were out there were used to produce new video games, new PS4s, new Xboxes, and so now car companies are struggling to find new chips. And so because of that, it's harder for car companies to produce new cars, which is making it harder for people to find new cars available for sale. And so because people can't find new cars, they've been turning to used cars. And so before, back in 2020, when there was a whole bunch of uncertainty going on, we had a huge amount of used cars available for sale. And now in 2021, in the later part of 2021, it's the opposite. We have a lot of people that are trying to buy used cars because there aren't enough new cars out there, and this has pushed the price of new cars way up. Same with gas. When the 2020 pandemic hit, the whole world shut down, so the whole world stopped using gas because people weren't driving and plants were not running, so the need for gas went way down, and so we saw the production of oil also go way down. Well, the production of oil hasn't really picked back up yet, and a lot of these oil companies haven't really come to an agreement on how much oil they should be producing, and so because we have less oil being produced right now, the price of gas is way up here. I was actually driving around the outskirts of Chicago the other day, and I'm not talking about downtown, I'm talking about the outskirts, and regular gas was $4.09 a gallon, and if you wanted premium gas, it was $5.09 a gallon. We're seeing the same issues with meat, and with car rentals a little bit interesting, because what car rental companies were doing was, back when the 2020 pandemic hit, many of these car rental companies ran into a lot of financial problems, so they started liquidating their inventory, meaning they started selling off the cars in their lot because nobody was traveling in 2020. Well, now in 2021, where you have a lot of people trying to go back to real life, trying to travel again, and you have these car companies, these car rental companies that don't have as many cars on their lots because they sold off so many, and so now you have way less car rentals out there, and a lot of people that want to rent the limited supply of rental cars there are, which is again pushing the price of rental cars up. And then we have airlines also running into similar issues, where one, airlines are having to pay higher prices for gas, and second, a lot of airlines are not running at 100% capacity, which means you have less flights going from one place to another. So if you have half the flights going from New York to California and the same amount of people want to go from New York to California, well, this is what's pushing the price of flights up because there aren't as many seats going from one place to the other. And I haven't even touched the housing market because we have other videos where I talk about that, but as you all know, we're also seeing a huge increase in housing costs, and I don't care if we're talking about rentals or owning a home, the price of housing across the board has been skyrocketing because of all the other issues like I talked about. You have a lot of people that want to go out and buy a home or rent a home, and not that much inventory available for sale. This is why it's no surprise that the new July inflation report that just came out said that we broke another 12-year record with inflation. So let's talk about what's going on and what the Federal Reserve Bank says about this, because they have some interesting comments on this. So the Wall Street Journal did a very interesting write-up on the current state of our inflation that we're seeing right now. And what they said is that yes, the inflation that we saw between July of 2020 and July of 2021 is record-breaking. The good news is the amount of inflation that we're seeing month over month, so between June to July, has decreased. So what we saw between May to June was very high, and what we're seeing from June to July is high, but it's not as high as it was. That might be a little confusing to understand, but the article had a really good analogy that I think you'll appreciate. So what it says is that between May to June, our economy had 104 fever. Now between June to July, we saw the economy go down to 101 fever. It's still a fever, but it's not as bad as it was. What that means is we're still seeing the price of things around us grow very quickly. It's just not growing as fast as it was a little while ago. But one of the reasons that we see the inflation that we have right now is because the value of our dollars are being diluted. This is what inflation is. Inflation is when the value of your currency drops, which causes the price of things around you to go up. And one of the things that causes this type of inflation is when you have more dollars out in circulation, because when there's a lot more dollars out there, the value of each dollar that you have goes down. The Federal Reserve Bank is the central banking system in the United States, and they are the entity that controls our monetary supply. Now, the interesting thing about the Federal Reserve Bank is that although it's called the Federal Reserve Bank, it's really not a bank because you and I can't go there to deposit money. It's not a reserve because they don't keep cash reserves anywhere, and it's not federal. They even say so on their website. They are a private entity. But the Federal Reserve Bank has the ability to control our monetary supply because they can work with the Treasury Department to print money, and they can also control interest rates, and both of these things have a big impact on the inflation that we see. When you print more money and you inject this money into our economy, this creates more inflation because now you have more dollars floating around, and when you have lower interest rates, this also creates more inflation because now people are more likely to go to the bank and borrow money, which adds more dollars into our economic system. So when you have more dollars in the economic system, the value of each dollar that you and I have goes down, which in turn causes the price of things around us to go up. So the Federal Reserve Bank has been working with the government to increase inflation because that will allow the economy to grow, because they want to get more money, more dollars into the hands of people and businesses, that where businesses can go out and hire more people and create more jobs. That way the economy can grow, and that will get the economy and the system running again. Now this is kind of like a tug of war, because on one hand you have a healthy amount of inflation where you're adding more dollars into the system, people are making more money, the economy is growing, which is good. But on the backside and the risk is too much inflation, because at the same time while you're doing that, the value of our dollars keep losing value. And so if you do too much inflation, well, now the dollars that you have are worthless, or they're not worth as much as you'd hope. And now the people that have been saving money and working hard to earn money are not able to afford their regular life because the price of things are so much and people aren't making enough money to afford the cost of living. So this is the tug of war that the Federal Reserve Bank has been dealing with. And what they say is that before they start to slow down inflation, they want to see two things happen. They want to see inflation hover at around 2% a year consistently, and they want to see the job market come back. Now, for regular people who have regular costs, we've been seeing this 2% inflation, but the Federal Reserve Bank has their own indicator of what they believe is 2% inflation. And just recently, after the most recent inflation report, the Federal Reserve Bank says that they think that we're hitting around this 2% inflation figure. Let me read you a quote from a Yahoo Finance article so you know what I mean. Under the Fed's current policy guidance, rates will rise, quote, when inflation hits 2%, which I think that you can argue it already has. And it looks like it is going to sustain there. That quote is from a speech given by a president of the Federal Reserve Bank, so it sounds like the Federal Reserve Bank is finally starting to think that we're hitting around 2% inflation. Well, back in 2020, the Federal Reserve Bank created this rule where they said that they were not going to stop the money printing, and they were not going to raise interest rates until we saw inflation hit at least 2% and even exceeds 2% a little bit a year. And they also want to see employment hit the maximum amount possible. But according to what the Federal Reserve Bank says, the thing that's holding them back from making more drastic action is they're still worried about the employment market. They're not seeing enough people go back to work, and because of that, they're still scared to raise interest rates, and they're still scared to slow down their money printing. However, there are some new developments on that money printing side. The Federal Reserve Bank, at the time we're recording this video, is printing right around $120 billion every single month, and they're using this money to buy up bonds and other things to keep our markets afloat. So essentially, this is a $120 billion monthly bailout going into our markets, so investors feel more comfortable investing their money into things like bonds and stocks. Originally, the Federal Reserve Bank kept saying that they're not going to raise interest rates until at least 2023, and they don't plan on stopping this money printing until something around then, or at least much later, until the economy has fully stabilized. But now you're starting to hear something different. You're hearing that depending on what happens in August and September, we could start seeing this money printing start to taper away. The reason why the Federal Reserve Bank doesn't just want to stop these asset buybacks right now is because that's what they did after the 2008 crash. After the 2008 crash, the Federal Reserve Bank was also printing money every single month to buy back assets, to keep investors confident, to invest their money back in the market. And then when they suddenly stopped that, it created a small stock market crash, and they labeled that the taper tantrum. And so the Federal Reserve Bank says that they're worried about causing another taper tantrum crash. And so to prevent this crash, what they're saying is they want to be more cautious, and they want to slowly wean their money away from the market. That way investors don't see another crash. Now, if we put everything that's going on in the economy aside for a second and just take a look at this, this is why financial education is so important, because you have the Federal Reserve Bank and the government working to make sure that investors are not scared to invest their money. What does that mean? So if you are financially educated, you have the government and the Federal Reserve Bank on your side working to bail you out, to make sure that you're okay. This is why financial education is so important, because you don't want to be one of the people that is paying the cost for this. You want to understand the system, and you want to understand the game. That way you can win in the game, because so many people are not financially educated and they're playing in a game where they don't even understand the rules. This is why you want to be financially educated. That way you can make smart decisions with your money, and that way you can be the person that's getting taken care of instead of being the person that's just paying the price. Now, the Federal Reserve Bank and the government have been worried about the inflation that we're seeing, because time and time again, you hear all the officials saying that the inflation that we're seeing is transitory, but at the same time, they always kind of couple that with the fact that they say that inflation is a lot worse than what we expected, and it could last longer than what we expected. So the Federal Reserve Bank has been worried about the inflation that they're seeing, which is why it's interesting to see that they're now finally talking about doing something about at least the money printing, and now they're saying that there's a chance that they could start raising interest rates a little bit sooner. They still say that it's not going to happen in 2021, but now you're starting to hear talks of potential rate hikes on interest rates in 2022. Again, the Fed keeps saying that the reason why they're not willing to take more action to help slow down inflation right now is because of the labor market. They said that finally we're starting to see some inflation, even though it looks like everybody else has been seeing this inflation for a long time, but the Federal Reserve Bank says they're finally starting to see the target inflation that they've been hoping for. But the issue is that they're not seeing the employment market go to where they want it to be. Every single industry right now is struggling to find employees, while at the same time, we still have millions of Americans that are out of a job. So it's kind of a weird dilemma. Yahoo Finance interviewed the CEO of a trucking company, and what he said is that this is the worst trucking shortage that he has ever seen. The CEO then went on to say that they may need to increase wages by 20 to 30% if they want to keep prospective drivers, but the issue is that the company can't afford to pay that much more money right now. This is a dilemma that you're seeing not just in the trucking industry, but every single industry where companies are looking to find work. And a lot of companies have raised how much money they're paying for their new employees, but the problem is sometimes this pay increase is still not enough to attract more employees. And so companies are having to decide, okay, do we pay even more money even if we can't afford to pay this money, or do we just not have an employee? So this is creating like a whole cyclical inflation. So you have the price of things going up, and when the price of things go up, people need to make more money in order to survive. If people want to make more money, companies have to pay you more money. For companies to be able to afford to pay you more money, they're going to have to earn more money. For companies to earn more money, they're going to have to raise their prices. If companies have to raise their prices to get their products, that means they're going to have to charge you more money. If you have to pay more money, that means companies have to pay more money, and on and on and on and on and on. So it starts to create this real inflationary spiral until something happens to slow it down or to break it. The worry is that up until now, people have been able to afford the higher prices of things because over the last 18 months, people haven't been spending all of their money, although recently people have started to go out and spend, but people still have some saved up cash because they weren't paying their mortgages and they weren't paying their student loans thanks to the forbearance program. So people had some extra cash, and maybe they got some extra cash from the government, and so people had some extra cash in their bank account which they wanted to spend. And now you go out and you go shopping and you see the prices of things are more expensive, but it's okay because you got some extra cash. And then you start to see a little bit of wage increases, which is good, which helps you support these higher prices, but then the price of things keep going up higher. But now, as this free money starts to go away, especially with the unemployment benefits now starting to go away, well, now you have the prices of things way up here, and if people's wages are not able to support that, then people are not going to be able to keep buying things. And at this point, companies are going to have to make a decision. What do you do? Do you accept the lower revenue, or are you going to try to cut costs to keep customers? This is what a lot of money nerds are sitting on the edge of their seats for, because they're trying to see what's going to happen next. Are we going to see a lot of inflation, or are we going to see deflation happen? Because it can go one of two ways. We could see a lot of inflation if the value of our dollar really drops, causing the price of things to go up, or we could also start seeing deflation where now people cannot afford the cost of living, and all the extra dollars that have been printed were absorbed into the economy somewhere. And now people can't afford things, which is going to force the price of things to go down. And now companies are going to have to lower their profits. And now companies are going to have to start downsizing. And now you can see a real shift in the way that our economy functions.
Bitcoin is just a pyramid scheme, chain letter, Ponzi. Bitcoin has no actual value, right? It's just a string of digital numbers that does nothing in the real world. I mean, you don't actually have any utility